The markets have been quite volatile, and quite a few investors are worried about the performance of their mutual fund, especially the ones which have not performed well in recent times. One of them is PGIM India Midcap Opportunities Fund. So, in today's video, we'll do a detailed analysis of this fund, and by the end of this video, we shall be able to decide whether we should continue our investment in this fund or not. Earlier also, I have made a video on this fund. Links are attached in I button and in the description. Hello everyone, I am Dhaval and welcome to my channel DIY Finance. Let's start the video with the basic details of this fund. First, the AUM, that is the total asset under management, which is about 9,350 crores, which I feel is on a lower side as compared to other funds in its category. While the expense ratio is 0.40, which is lower when compared to other schemes in the category. The benchmark index, that is the reference against which the scheme is compared, is Nifty Midcap 150 TRI. Now let's look at the fund's trailing returns. From the table, it is quite evident that the fund's performance has been quite good for 5 years and 7 years period and is able to beat its benchmark and the category average. But if you observe for 3 years, it is just about the same as its benchmark and the category. But for period 1 year and less, it has usually underperformed. Generally, the trailing returns will not always give the actual performance of the fund. So for that, let's look at the calendar returns and the rolling returns. Firstly, the calendar returns. Here we have the data from 2014 to 2022, and for this entire period of 9 years, the fund has underperformed, leaving aside the year of 2019, 20 and 2021. Hence, from this data, we can say that the fund is not that consistent in its performance, and most of the outperformance has come specially from 2020 and 2021 only. Now let's also check the fund's performance for this calendar year. Here we have the data for the first 9 months of 2023, and in these 9 months, the fund's performance has been better than its benchmark only for 2 months, that is in February and May of 2023, which clearly suggests that in this year of 2023, fund's performance is also not that great. Now let's quickly check the rolling returns. Here we have rolling returns data for 1 year, 3 year and 5 years. If we observe the 1 year rolling returns, the fund is able to beat this benchmark 57% of times with a negative returns of 23% of times with an average return of 21.31%. Now let's see the 3 years rolling return. Here also the data is not that good. The fund is able to beat its benchmark 56% of times with an average return of 18%. Now finally, let's look at 5 years rolling return. Here, the fund is able to beat its benchmark 74% of times with an average return of only around 15% with almost no negative returns. Hence, from the rolling returns data, we can conclude that the fund's performance is not that good but is an average performing fund. From the past performance data that we have seen till now do not indicate that the fund is an excellent fund, but past data is not always an indicator for future performance. So now let's see what we can expect from this fund in coming times. For that, we will look at the fund manager and we'll also do a detailed analysis of the fund's portfolio. So firstly, let's look at the fund managers. Mr. Vinay Paharia has taken over from Mr. Anirudh Naha in April of 2023. That is, just 6 months back, there has been a change of fund manager for the scheme. Mr. Vinay Paharia has been joined by Mr. Anand Anjani in August of 2023. So we can say that the fund house has appointed a new team of fund managers for the management of this scheme. So now let's look at the fund's portfolio and we'll start with its sector-wise allocation. Here in the graph, if you observe, the highest weightage is given to the financial sector, which is around 18%, followed by automobile sector with around 15%, healthcare and capital goods sector with 9.5% and 9% respectively. And when we compare the sector allocation with its benchmark, the allocation is quite different except for the financial and service sector. Automobile sector has been performing quite good in recent times. And for the India's growing economy, the performance of financial sector is also quite important. Now let's look at the top holdings and asset allocation. Cholamandalam Finance and HDFC Bank are the main stocks of the financial sector, whereas Tube Investments and TVS Motors are from the automobile sector. Max Healthcare and About India are the stocks of healthcare sector. Here, the stock selection seems okay, but quite a few stocks are with a higher PE. Now let's check the portfolio allocation. Here if you observe, mid-cap stocks form around 69% of the portfolio, whereas large-cap stocks form other 30% of the portfolio, whereas less than 1% is allocated to small-cap stocks. The lower allocation to small-cap stocks should make the portfolio less volatile. Let's see this in the later part of the video, whether really the fund is less volatile or not. The portfolio is not concentrated as there are 69 stocks and the top 10 stocks form around 26% of the portfolio, whereas top 3 sectors contribute to around 42% of the portfolio, with around 18% coming only from the financial sector. Here, the portfolio PE and PB are also on a quite higher side, which suggests that the fund has most of the growth stocks in its portfolio. Now let's see this table, which gives a very concise view of the portfolio. Here we have the data of 1 year and is compared with its category average. It clearly indicates the fund follows a growth style of investing with low yield stocks. The momentum and quality of the portfolio is on a higher side with less volatility and liquidity. Now let's check the portfolio changes made in last 1 month. The fund is having a high turnover ratio of 99% and the fund manager is churning the portfolio so as to improve the performance of the fund. Firstly, let's look at the stocks bought last month. As evident, the fund has added Astral Poly, Info Edge, Happiest Minds Technology, Syngene International Limited, and Mankind Pharma to its portfolio. Whereas it has sold Jubilant Foods, Star Health Insurance, Prestige Estates, Naveen Fluorine, and Phoenix Mills. So from the portfolio overview and its data, we can say that the fund is following a growth style of investing and the fund manager is frequently making changes in the portfolio to make the fund perform well. So before concluding what investors should do, let's quickly look at the risk parameters of the fund. Here we compare the parameters with the benchmark index and the category average. First one, mean return, that is the average return in a year, which is 28.74, which is slightly higher than the category average, but lower than the benchmark index. Here, higher the value is better. Second one, standard deviation, that is a tool to measure how much the returns is deviated away from the mean returns, which in this case is 15.63, which is more than the category average and the benchmark index. Here, lower the value is better. Third one, Sharpe ratio, that is a tool to measure the risk-adjusted return, which is 1.56, which is lower than both the benchmark index and the category average. Here, higher the value is better. Fourth one, beta, that is the volatility of the scheme compared to the benchmark, which is 0.93, which is more than the category average. Here, lower the value is better. Fifth one, alpha, that is a tool that measures how much better the fund has performed compared to its category. Here, it is 0.78, which is higher than the category average. Here, higher the value is better. From the risk parameters, it can be concluded that the fund is able to generate returns more or less same as its benchmark and the category, but with a little higher volatility, which is not considered good for a fund. Now let's see the upside and downside capture ratios. The upside capture ratio is the measure of how the fund performed relative to the index during the period when the index rose. Here, the value is 96, which indicates that the fund outperformed 4% more than the index during the rise period. Here, higher the value is better and should generally be more than 100. The downside capture ratio is the measure of how the fund performed relative to the index during the period when the index has dropped. Here, the value is 86, which indicates that the fund declined 86% as compared to the index during the fall period. Here, lower the value is better. The capture ratios are also not that great and does not indicate a very high potential in uptrending market cycle. So now coming to the conclusion what investors should do. But before concluding this video and suggest what investors should do, I would request all of you that as you have watched the video till now, it seems that the topic is of your interest. Hence, I would request all of you to hit the like button and also subscribe to my channel if you have not done till now to watch such interesting videos in future also. Here, I would like to clarify that this is not a buy or a sell recommendation and one should take decision by himself or after consulting his or her financial advisor. This video I have made for educational purpose only and my aim is solely to provide real insight into funds data. Please do not mistake this as a buy or a sell recommendation. So now let's look what investors should do. First, the existing investors. The fund's performance has not been that great in last almost 2 years, as well as fund has not been that consistent in its performance also, but has given excellent returns in the year of 2021 and 2022. So if you are invested in this fund, you can wait for some more time and closely watch the performance of the fund. One more reason to wait is the change in the fund manager. I feel one should give a chance to the new fund manager who has just been appointed in April of 2023 to show his mettle. Second, new investors. The fund's performance has not been that great in almost last 2 years. Hence, one can look at other consistent and good performing funds from Kotak, Quant, HDFC or SBI. You may consider this fund only if you are very much confident on the present fund manager, Mr. Vanni Paharia. This is my personal opinion, and I may be wrong also in the coming times. So what do you feel? Please feel free to share your opinion in the comment section. Would love to know your views on this fund. I would like to add that presently I have PGIM India Midcap fund in my portfolio and is planning to hold it till my next review. I will again try to review this fund after 6 to 7 months and check its performance. So stay tuned to my channel. Please subscribe to my channel if you are not done till now and also press the like button. Do check my older videos. Click the attached cards to watch these videos. Thank you and see you again in my next video.